Right, we've covered so far then, we've covered P1, which is different types of costs, and we've covered P2, which is just sources of revenue. So if you can just stop, Lee, just stop typing for a sec. Thank you. What we need to look at today is P3. Once you've covered P1, P2 and P3, that will enable you to cover the whole of M1 and also move on to D1. So what we can start to do is, those of you moving quite quickly ahead, can get the pass criteria done and start to stretch yourself with the merits and distinctions. Those of you that maybe are struggling a bit and taking more time, will have more time to focus on P1, P2, P3. What is the definition of profit, someone? John, what is profit? The money you get from selling things. Money you get from selling things. Who agrees with that?
The extra money you get from selling things, like selling products.
Okay, so the extra money you get from selling things. Extra as opposed to what?
The difference.
The different. Okay, that's how much. Isn't revenue how much you've earned though? Revenue's how much you've earned, isn't it? The difference between what, Courtney?
You get different profit.
Like the price and no. I don't know, the price you pay for it and the price that you're getting out of it.
The price you pay for it and the price you're getting out of it. Do we agree? What do we reckon profit is, Ben?
Like the money you make minus the cost of, like, say, it takes to build something. You know what I
The
mean?
purchase price and how much you charge for it.
Pretty much perfect. Okay. The definition of profit is when revenue is greater than costs. It's right there.
Oh.
This wasn't like a kind of secret. Let's get you, get you question. Profit, revenue minus total costs. Remember, the revenue is all money coming into the business. So this could be sales revenue, interest revenue, dividend revenue, non-operational revenue, all the money coming into the business, minus all your costs, i.e. minus your variable costs and your fixed costs, or minus your operating costs and your startup costs. That is profit. If that's profit, what's loss? Anderson.
The profit was loss when the cost is greater than the revenue.
Loss is when the cost is greater than the revenue. Because you're making a loss, aren't you? You're losing money. If you're paying out more than's coming in, you're losing money. So if, for example, at home, you get paid £800 a month, but your bills are £1,000, well, you're losing every month £200. It's one minus the other. Okay? And remember, in revenue, selling price times quantity sold. Sales revenue, selling price times quantity sold. We've got an example here. We've got some figures. SP stands for? Selling price. QS? Quantity sold. FC? So?
Cost.
Something cost. Fixed cost, good. VCPU?
Variable cost.
Variable costs.
Price. Product. Oh no.
Any ideas? Variable cost per unit. Variable cost per unit. So, those of you may have started to work this out already. How much profit are we making here? How do we work out how much profit we're making? So on a piece of paper, Georgina, you paying attention?
Yeah.
Yeah? Making notes?
Do you know at the top you've read revenue, take away total cost?
Yeah.
What's the total cost again?
It's all your costs.
Alright.
So it might be your variable and your fixed, if that's the way you're looking at it, or it might be a startup and your operating. Everything here, this is that going to give that?
So when that's the way to work out your profit.
Everything you pay for, your total costs are everything you pay for. Okay?
Alright.
We've got to work that out, yeah?
So what was that we got?
15 times 5.
Okay, let's
start 26. Because one is 22.
careful. You've got part of it. What's the first thing? What's the first sum you've got to do here?
15 times how much?
15 times 5. Why is that? What does that give you?
The money you make.
The money you make. Remember, selling price times quantity sold. Selling price is £5. You sold 15. 15 times 5 is
75.
75. So that means, looking at this equation here, profit is revenue minus total costs. I can't write the board, it's really going to annoy me. But imagine there was 75 written above this revenue, because that is how much money is coming into the business. Okay? With me so far? Okay. How much are we paying out? This is where it starts to get a bit harder now.
25.
Okay, we're paying out £25 in fixed costs. So that might be your rent, your machinery, whatever. What else are we paying out?
15 times 1, because cost per unit.
15 times 1. So what are your total costs?
Total cost. 45. No. 40 quid.
46. 25,
Yeah, that's
fixed
right.
costs. 15 times 1 is 15, variable
40
costs,
quid.
£40.
Yeah.
Total costs of £40. Profit must be
35.
£35. Can everywhere see where that's come from? The calculations we've done. So we've looked at revenue is 5 selling price times 15. That's how much we're making in. Costs, your fixed costs are £25. So if we sold 15,000, still be £25. If we sold 1, still be £25. But your variable cost per unit, £1. So that's your materials. Is £1. You've sold 15, so therefore for every unit you sell, £1 of cost added on. So that's a variable cost of £15. And 25 is 40. 75 minus 40 is 35. That is your calculations for working out profit. However, there are more than one definition of profit, and there's some key terms that you're going to need to know and going to need to be explained as part of P3, which is what we're going through now. So, gross profit is your sales revenue minus cost of sales. I would expect to see that in everyone's assignment. Okay, gross profit is your sales revenue minus your cost of sales. So it's all the money that you're making from selling your product minus the direct costs of production. This is the key bit, right? It says here, known as direct costs. What that means is we can give a value of all these costs per product. So it says the examples would be buying stock, raw materials, labour and energy. What that means is, for every product, we could say, okay, it costs £1 in raw materials, it takes 2 hours to make, therefore we need to, that's 2 lots of someone's hourly wage, and it takes an hour to make on that machine. This is how much energy we pay to make this product. It's called a direct cost of production. You can quite clearly see where the costs come from. So again, go back to my lovely monitor example. For this monitor, the direct costs, well we can see that there's this much plastic, there's this much glass. We know that, so we can see it and we know our costs. We know that it takes 10 hours to make this monitor. So we can say that this is how the cost is given to that product. We know that it takes 4 hours of electricity on 2 different machines. We know how much an hour on each machine costs. We can work out there's a direct cost of production that goes towards making that product. Okay, so gross profit, as I said, sales revenue minus cost of sales. The direct cost of making the stock you're going to sell. So when we start to look at accounts, you'll have revenue, you'll have all your cost of sales added up, taken away from your revenue, and that will give you a gross profit. However, we all know that things don't stop there. There are other things that need to be taken out of your money, and they're known as expenses. So as it says there, again, I would expect to see this in all assignments. Net profit is your gross profit minus expenses. What I would just see is, I can see some of you, you don't have to write everything down from the slides, because obviously the slide's on the VLE and so is this. It's just your additional notes. Anything additional that you think will help you. Okay? These are known, as I said, expenses. They're indirect costs. They're very, very hard to say how much of the cost goes towards any particular one unit. So you can see that here, the examples are marketing, insurance, heating and lighting. If we have a huge product range, like Apple, we spend all this money on marketing, somehow it needs to be covered, doesn't it? If we're going to spend 10 million on marketing, this needs to go into our account somewhere, because it wouldn't add up otherwise. But how do you say, how much of that 10 million was spent on selling this one monitor? It's impossible, isn't it? It's impossible to know. Insurance, how much that costs per year in terms of your buildings insurance, your liability insurance, health and safety, what have you. How much of that cost goes towards making this one product? But yet, when you sell this product, the selling price has to take into consideration all these costs, doesn't it? It can't just say, well, we're going to ignore marketing, we're only going to cover our materials, our labour and our electricity. Because then who would pay for the marketing, the insurance and the heating and lighting? So remember, they are indirect costs. It's really hard to see how they make up the product. And these are just some examples of ones you want to maybe think about. This slide may help a little bit. What this shows is an example of a profit and loss account. So what you've got here is you've got your revenue, you've got your cost of sales, so you've got your direct costs, you've then got a total which is blanked out, a gross profit. Give you 30 seconds or so, please don't shout out. What amount do you think goes there? Can anyone work that one out? Please don't shout out. You've got your revenue, 23,500. You've got two costs of sales, 3,250 and 1,750. Your gross profit is 18,500. What is your total cost of sales? Who's got it? A couple? Anyone else now got it? Go on, Lee.
I think it's 5,000.
You would think correctly.
Can't see the
You would think correctly. Why is it 5,000? How did you work that one out?
you add the costs.
Yeah, there's two ways of doing it. There's two ways of doing it. Okay? You've added the two costs together, haven't you? Remember that to get your gross profit, it's revenue minus total cost of sales. Well, it's the difference between these two, isn't it? The difference between them must be that one. We've got here, we've got our expenses. They add up to 6,715. I don't want the amount this time. Tell me the formula to work out that one.
Wouldn't it just be the total loss take away? No. Wouldn't it be like 1,715? Which one am I working out?
You're working out this one here. This box here, net profit. What's the formula for net
Oh.
profit, please?
Gross profit minus expenses.
Gross profit minus expenses. So what would you take away from what to get that box there?
Take 6,715 from the take 18,500.
18,500 is your gross profit. Minus 6,715 gives you your net profit. Just remember the formulas. Remember the formulas, okay? Revenue minus cost of sales is gross profit. Net profit is gross profit minus expenses. Once you get those formulas into your head, it becomes very, very simple. Right, don't worry, we're going to go over this again. The video is there and I will be supporting you through this session. What you need to do, tell me what is profit and show me how it's calculated. Then move on to explain the difference between gross profit and net profit and show how it's calculated. Put that as a sub-bullet point there. What may help you, and feel free to, that diagram that I just had here, take that, put it into your work and kind of annotate the diagram if you want to.
How did we get it?
The PowerPoint's on the VLE.
Oh.
This whole PowerPoint is on there. You can just copy the image. Okay? So, like I say, this here is P3. Defining profit, show how it's calculated. Explain the difference between gross profit and net profit. Remember those formulas need to be in there. And show how they're calculated. And then you've done P1, P2 and P3 and you start to move on to M1 and D1. Has anyone got any questions before we start? Okay, if you have and you want me to speak to you individually, then just give me a shout.